Honestly, I don't have a crystal ball. But if there's one thing I learned in Rich Dad, Poor Dad, it is that the economy works in cycles. One moment we are at the top, the next, everything crashes. In the past, I would be that guy sweating cold while watching the chart of red lines falling endlessly. I would stand paralyzed, just hoping for the market to bounce back. But this time I decided the story will be different. I stopped trying to guess when the crisis will come and focused exclusively on being ready before it knocks on my door. While most people panic, I finally opened my action plan. You know, everyone paints the crisis as the end of the world. I thought so too, but I realized that the biggest leaps in wealth happen precisely when everything seems lost. The real difference lies not in the market chaos, but in our reaction. For those who are unprepared, it is pure despair. But for those who prepare, the crisis turns into a gigantic sale. Today, I stopped feeling fear and started seeing the window of opportunity that is about to open to change my future. The turning point in my head happened when I understood Robert Kiyosaki's #1 rule. It is brutally simple, but most of us ignore it. Assets put money in your pocket. Liabilities take money out of your pocket. Period. I looked at my financed car or the month's shopping and thought I was building wealth. Rich Dad taught me that these are just liabilities draining my financial life. To face what is coming, my mission became an obsession. Accumulating assets. I am talking about investments, stocks, or small businesses that generate income on their own. If the crisis hits and my salary disappears, it is the assets that will pay the bills, not my new car in the garage. When I speak of crisis, I learned not to put everything in the same basket. There is a giant difference between a normal market correction and a real financial collapse. A drop of 10% or 15%? That is just the market breathing. It happens all the time, and I cannot despair over it. But I am truly shielding myself for the heavy scenario. That systemic crash, where everything plummets 40% or 50%, and panic spreads through the streets. The mistake of the majority is having a single plan. If the drop is light, they sell in fear. If it is heavy, they go broke. My strategy is now tiered. If it's a ripple, I follow my contribution routine. If it is a tsunami, I have cash and protection to not only survive, but to buy valuable assets at banana prices. No matter the intensity of the drop, I decided I will not be caught by surprise. To avoid getting lost in chaos and acting on impulse, I drew a mind map divided into 3 very clear phases. It is my compass to cross the storm. First, we have euphoria, that blind moment that precedes the fall. Then comes the collapse, the eye of the hurricane where fear reigns and prices melt. And finally, opportunity, the silent moment of reconstruction. I need to identify exactly which stage we are in now to know which strategy to activate. Without this map, I would just be walking in the dark. The first phase is the most treacherous and honestly the funniest, if it weren't tragic. It is that moment when everyone becomes a financial genius overnight. You know, when my neighbor, who never saved a cent, starts giving me tips on unmissable investments, tips that yield 20% a month. That is where the danger lies. It is the era of easy money. The bank practically throws credit in your face, and people buy absurd things, thinking the chart will go up forever. You see people quitting their jobs to live off day trading without knowing the basics. When greed takes over and even the coffee lady says the stock market never falls, my internal alarm goes off. The party is too good to be true. When I smell this euphoria in the air, my immediate reaction is not to participate, it is to retreat. It is exactly here that I activate my protection checklist. The first rule is to stop chasing the big bet of the moment. If everyone is screaming to buy, I stay quiet and suspicious. I start simplifying everything. Complex investments, those bets that depend too much on luck, I reduce them drastically. My goal changes. I stop seeking maximum profit to focus on maximum security. While the crowd takes stupid risks thinking they are invincible, I am calmly fortifying my positions. I prefer to lose the last 10% of the rise than to get stuck inside the building when it starts catching fire. The biggest trap I learned to avoid is leverage. Rich Dad always warned, bad debt is a financial cancer, and in a crisis, it becomes fatal. When euphoria is at its peak, it is tempting to take easy credit to consume or invest more. But that is exactly where I hit the brakes. I did a complete sweep of my accounts. Installment credit cards, unnecessary financing. I started eliminating everything aggressively. Why? Because when the crisis hits, liquidity disappears and interest rates explode. I don't want to be in the hands of the bank manager when that happens. I prefer 1,000 times to live a step below now than to face the market collapse with a debt anchor around my neck. Money sitting in the account is not a loss, it is ammunition. In this phase, I learned to separate my capital into two very different pots, and this changes the game completely. The first pot is my emergency fund. This is sacred. It is the money for my peaceful sleep. If my car breaks down or I lose my main income, I don't need to sell my investments at the worst possible time just to pay for lunch. But the big secret lies in the second pot, the opportunity cash. Dry powder. While the majority is 100% invested and without liquidity, I am patiently accumulating this cash. When the market crashes and prices become ridiculous, it is this money that will allow me to buy cheap. Without cash, you are just a victim of the crisis. With cash, you become the owner of the opportunity. Another vital lesson: security is never depending on just one thing. The biggest risk anyone can take is having only one source of income, usually the salary. If this single source dries up, the game is over. I like to imagine my financial life as a table. If it has only one central leg and something hits it, everything collapses. That is why I started building other legs for this table. Besides my job, I seek dividends, extra income on the internet, or a small side business. Diversifying investments is good, but diversifying income sources is what saves your skin. If the crisis breaks one of these legs, the table wobbles, but does not fall. I remain standing, while those who depended on a single bet stay on the ground. And then it happens. We arrive at phase 2, the reckoning. Suddenly, the chart that only went up turns into a red waterfall. The news changes its tone and only speaks of imminent disaster. You know that optimistic neighbor? Now he swears the world is going to end. The real problem here is not the market, it is your head. The pain of seeing wealth melt is visceral. Mass psychology collapses, and I see people selling everything at the bottom of the pit just to make the pain stop. It is pure emotional contagion. The market at this time is not testing your intelligence. It is brutally testing your stomach. If you follow the herd now, you will jump off the cliff with them. To not be crushed by the pressure, I religiously follow my survival rules. Rule number 1 is absolute. I never make financial decisions when my heart is racing. Fear is a lying advisor. At this time, I force myself to ignore the feeling of the moment and blindly obey the plan I drew back then. When I was calm and rational, that me from the past knew what he was doing. The me from now just wants to run away. My second rule is forbidden to sell at the bottom of the pit. Selling low is turning a red number on the screen into a real and irreversible loss in my account. I turn off the news, stop looking at the balance every 5 minutes, and simply wait for the storm to pass. The secret here is not to be a genius. It is just not to commit the stupidity of selling when panic commands. Remember that opportunity cash we filled back there? The time has come for it to shine. While everyone sees loss, I put on Rich Dad's glasses and start seeing sale. Imagine your dream car is 40% off. Would you be sad or buy it running? With valuable assets, it is the same thing. But attention, this is not an invitation to go out buying any junk that dropped in price. I have criteria. I am talking about buying solid companies or real assets that were unfairly penalized by general panic. I do not seek the lottery ticket. I seek quality at banana prices. The crisis separates the wheat from the chaff, and I use my cash to buy the wheat, while the rest of the market is throwing everything away. The biggest mistake I see in this phase is the arrogance of trying to guess the bottom of the pit. It will fall a little more, it'll wait. Spoiler, you will be wrong and will lose the opportunity. That is why I use a boring but infallible strategy. Constant contributions. I do not try to be the market psychic. I simply divide my cash and buy a little every week or every month, come rain or shine. If the market falls more, great, next week my money buys more shares. If it goes up, great, my wealth appreciates. This consistency takes the emotional weight off my shoulders. I trade the anxiety of hitting the perfect timing for the mathematical certainty of buying cheap over time. The process beats emotion, always. It is no use having a perfect investment plan if the money tap dries up along the way. The crisis not only tests your stock portfolio, it violently tests your main income. Therefore, my priority becomes shielding my cash flow. I take the scissors and cut any superfluous spending without mercy. Subscriptions I don't use, buy. Momentary luxuries, cut. But saving has a limit. Earning more does not. I invest heavily in myself. I learn new skills and seek that extra income, the famous side hustle. It could be selling something online or providing a service. The goal is to ensure that, even if the world is on fire outside, I have new money coming in every month to keep buying cheap assets non-stop. And then, the sun appears again. We arrive at phase 3, the recovery. This is where the magic Robert Kiyosaki talks about so much happens. Those assets I bought at banana prices start to skyrocket, while those who sold in panic now lament the eternal loss. My wealth takes a quantum leap. Not because I am a financial genius, but simply because I had the stomach to plant when no one else wanted to. But careful, seeing the account grow fast is intoxicating. The danger now is the ego. It is easy to think the game is won and go back to spending like crazy. I need to keep my feet on the ground. The crisis has passed, but the discipline that brought me here cannot disappear. When the dust settles and normalizes, the temptation to return to old consumerist habits is giant. But I don't fall for it. The first thing I do is go back to filling my reserve pots, which must now be empty after the purchases at the low. The crisis taught me that living without a margin of safety is madness, so I keep my standard of living simple. No financing liabilities, just to celebrate profits. I review my goals and keep planting. The economic cycle will repeat itself one day, and when the next crisis comes, to be even stronger than today. In the end, the secret is not having a crystal ball, but a strong stomach and a clear plan. Before you run out to sell or buy anything, an important warning: remember that I am just a stick figure on the internet sharing my journey, not a certified financial advisor. Use this as inspiration for your studies, not as investment advice. Your money is your responsibility. If I had to summarize my entire strategy in a single sentence for you to take for life, it would be this: have the patience to accumulate cash while everyone parties, and the cold courage to buy valuable assets while everyone cries. It is simple, but not easy. Prepare yourself and see you at the top.